It's looking like the S&P is going to make a new high in January. Today is January 11th, 2024, and we're describing the short-term and intermediate-term trends in the S&P. I also want you to realize that our emphasis in these videos is always on the intermediate and long-term. The short-term is much more difficult to predict accurately. Nevertheless, there is some information that we can share that should help. First of all, the cycles that we've been looking at have been repeating correctly. We expected a low on January 5th, a rally until between the 16th and 20th of January. We still think that. However, if you look closely at the structure of the most recent rally starting on January 5th, it has clearly 5 waves up. And that indicates it's likely to not be over, and it's likely to be potentially the one wave of a larger sequence. And even more important is that the rally that started in October of 2023 had probably 3 waves up rather than 5. That the low on January 5 was the end of the 4th wave, and right now we're in the last leg in the 5th wave of the rally that started October 27th. And the next high is likely to be approximately January 18th, and we're looking for 49.50 to 5,000 as the next resistance levels, which take us above the prior highs, also actually making all-time highs, probably on the S&P cash. Our timing other than that is very similar. We're still looking for a high approximately there, a low at the end of January, around the 31st of January, another high around February 7th, and a low mid-February to late February, followed by an extremely likely rally up into April. So the ultimate high that's coming in April is probably considerably higher than 5,000 if the market makes a 5,000 stand in late January. Now, it's also very important that we had said in our last video that we did not expect to see the market reach 6,000 or 7,000 by the end of the second quarter. We were referring to David Hunter's prediction, where he actually said probably by the end of the second or third quarter. We don't think it'll get there by the end of the third quarter either, because we're expecting a decline from April into June, and it's likely to start from a lower price level before the summer rally begins. So it turns out that the cycle of slightly less than a month, about 26 and a half days, has been repeating. It's one of the cycles that we found using the knowledge from our course. Is 26 and a half days is repeating so well that it's even repeating on a 5-minute bar chart. Day by day by day by day, the 5-minute structure is extremely similar. And here it is. You can see some of these days that are overlapping over the last 11 or 12 trading days. And if it continues, it tells you pretty much what will happen next. The blue line going forward would give you an idea what's coming next. And we're expecting to see ultimately higher prices next week than we saw this week, even though we had a correction today. The correction that happened was probably a 2-wave of the 5-wave, 1-wave that started on January 5th. Okay, so it should be another move up that's meaningful in the next few days. Another point is, if we do make new highs, which will be above 49.50, could be 5,000, the correction that's coming in February, which is still likely, is likely to not be as low as the correction that was anticipated prior, where the 45.08 was the midpoint of the range. About 45.58 would now be the new midpoint of the new range, using 5,000 as the projected high. And therefore, we could see 45.50 to 4,600 as a low area in the correction that's coming after this completed 5-wave sequence that started October 27th. Okay, so we're looking for higher prices in the short term, and we're also looking for not as low prices on the correction. Now, the timing's the same though. What happened in the year 2000 is very much the same, except we're in a stronger market. So the up moves will be bigger than the up moves there, but the timing and the dates of those moves is likely to be the same this year as it was then. And also we looked at 1953, and we saw a January 12th low and a February 4th high. And we're likely to see something similar here again. That there's going to be a high in mid-January, a low at the end of January, and a high early February, okay, before the decline into mid to late February, completing the correction. Now, ultimately, the big picture is the same. We're very bullish until April. We're looking for a big break in April to June, and the second half of the year, we're looking for a continued rally, as we said earlier. Also, I wanted to announce our next course, our Trade Forecast Mastery Masterclass will begin on January 21st, Sunday, January 21st. For those who are interested, please let us know, and we will like to interview everybody that we invite onto the course. And so far, we have a number of people who have already signed up, and it looks like it's going to be a wonderful group.